Soaring home prices. Brutal interest rates and fierce competition for houses are making the Canadian dream of homeownership seem like a fairy tale, and the biggest obstacle for most people is saving up enough for a down payment. What if there was another way? A way that didn't require perfect credit or a fat wallet. Today we're diving into an often misunderstood path to homeownership, rent-to-own. It might not be the right fit for everyone, but it could be a game changer for some. Let's dive in. The traditional homeownership dream, a fading reality. Owning a home has long been seen as a cornerstone of financial security, but lately it's looking less like a dream and more like a distant fantasy. Here's why. Skyrocketing home prices, thanks to low interest rates and high demand, have pushed home affordability out of reach for many. In 2022, the average home sold for $440,300, marking a 6.9% increase from the previous year, according to the National Association of Realtors. That's a record high. At the same time, mortgage rates have been flirting with 7%, meaning your monthly mortgage payments are going up, making that dream house even less affordable. But it's not just about higher prices, it's also about the down payment, a lump sum of cash that's typically expected up front. This is where many people hit a wall. The typical down payment in 2022 was 20%, meaning you'd need at least $88,000 just to buy that average-priced home. And then there's the issue of credit scores. Lenders use them to figure out how likely you are to pay back your loan. If your score isn't great, you might not qualify for a mortgage, or if you do, you'll probably have to pay a higher interest rate. So for a lot of people, buying a home feels like an impossible puzzle. All of these requirements, prices, and paperwork make the process feel like a maze with high stakes. So it's no wonder so many would-be homeowners are feeling discouraged and wondering if the dream is slipping further and further away. Why many feel locked out. Imagine being so close to the finish line, yet unable to reach it. That's how many people feel when they re-stuck in the rental cycle and yearn to own their own home, but can't seem to get there. But why does this happen? The answer often boils down to three major obstacles. Number 1, the down payment. Like we mentioned earlier, this upfront cash is a big hurdle. Many people simply don't have $20,000 sitting around. They're living paycheck to paycheck, paying off student loans, dealing with unexpected car repairs, and trying to save for their retirement. Where's a person supposed to find 20 grand in the middle of all that? No. 2. Credit scores. These three numbers can make or break your home buying dreams. If your credit score isn't perfect, you might not qualify for a mortgage. Or if you do, you'll likely face higher interest rates, which means you'll end up paying more for your home loan over time. This can be especially tough if you've faced job loss, medical issues, or other financial setbacks that have temporarily dinged your credit score. Then there's 3. The fear of taking on too much debt. Buying a home is a huge financial decision. Many potential buyers worry about taking on a mortgage, especially in today's shaky economy. With interest rates rising and home prices fluctuating, it's hard to predict what will happen in the next year, let alone the next decade. This uncertainty can be enough to scare off even the most motivated home buyers. So if you're facing any of these challenges, know that you're not alone. But instead of throwing in the towel, let's explore an alternative path, one that could lead you to homeownership sooner than you think. Rent-to-own, demystifying the concept. Rent-to-own isn't a one-size-fits-all solution, but here's the basic idea. You rent a property with the option to buy it at a later date. During the rental period, a portion of your monthly payment goes towards the eventual purchase of the home. Sounds pretty straightforward, right? Well, there are two main types of rent-to-own agreements that you should know about: lease option and lease purchase. The lease option gives you the right, but not the obligation to buy the property at a predetermined price during or at the end of the lease term. On the other hand, a lease purchase agreement requires you to buy the property at the end of the lease term. There's no option to back out. Now, while both options involve making a portion of your monthly payment towards the purchase price, it's important to understand the implications of each before getting into an agreement. How your rent payment can build equity. In a traditional rental, your monthly checks go directly to the landlord's pocket. However, in a rent-to-own situation, things work a bit differently. A portion of your payment is held in what's called an escrow account. This money is then applied towards your future down payment and closing costs. Essentially, instead of building equity for the landlord, you're building equity for yourself. Think of it as a forced savings plan with a built-in down payment. But it's not just about the down payment. By making regular payments, you're also showing the seller that you're a reliable tenant. And if the deal goes through, you'll already have a history of on-time payments, which can bode well for your mortgage application. The game changers who benefits most from rent-to-own. Rent-to-own isn't just a one-track-fits-all solution. Different folks will have different experiences depending on where they start and where they want to go. But here's the bottom line. This arrangement can be a game changer for people who want to buy a house but can't quite afford it just yet. It's like a stepping stone on the path to home ownership. If you're struggling to meet the down payment or credit score requirements for a traditional mortgage, rent-to-own might be a good fit for you. Also, if you're unsure about committing to a specific area or want to wait for the right time to buy, rent-to-own gives you the flexibility to lock in a purchase price now and delay the actual purchase without worrying about rising prices. But remember, every advantage comes with a few drawbacks. And in the next section, we'll talk about the downsides of rent-to-own. Stay tuned. Navigating the pitfalls, risks, and red flags to watch out for. Before you sign on the dotted line, it's important to know the potential pitfalls of rent-to-own. You might be surprised by a few things lurking in the fine print that could turn your homeownership dream into a financial nightmare. So what are these hidden pitfalls? Let's dive into 3 common red flags that could pop up when you're rent-to-own. The fine print nightmares. The devil is in the details, as they say. Renting a home is already a minefield of legalese, but rent-to-own agreements come with even more documents and clauses that can be tricky to navigate. For example, you might encounter a balloon payment clause, which requires you to pay a large lump sum at the end of the lease term. Or you might run into an option fee, which is a fee you pay for the right to buy the property and can be lost if you decide against purchasing. These clauses may seem like technicalities, but they can have serious consequences for your finances, so it is crucial to read the fine print and understand exactly what you're recommitting to before signing anything. Escrow and maintenance. As we mentioned before, a portion of your rent payment will go into escrow to help you save for your down payment and closing costs. But there's more to this arrangement than meets the eye. Landlords typically want their properties to be well maintained, and that responsibility often falls on you as the tenant. So you might be surprised by unexpected repair requests or maintenance bills that eat into your escrow savings. Additionally, if the property needs major repairs that exceed your budget, you might have to dip into your own funds, which could delay your ability to save for the down payment and purchase the home. When it goes wrong, just like any other real estate transaction, things can go wrong during the rent-to-own process. If you lose your job, get hit with a hefty medical bill, or experience any other financial setback that prevents you from making your payments, you could default on the agreement. And if that happens, you could lose everything you've invested up to that point, including the option fee and any money put into the escrow account. Is rent-to-own your path home? As we've explored, rent-to-own isn't a one-size-fits-all solution. It can be a fantastic opportunity to build equity, improve your financial situation, and eventually buy a house. But it also comes with its fair share of risks and challenges. So how do you know if it's the right choice for you? First, do your homework. Research the property, the neighborhood, and the local real estate market. Understand the purchase price, comparable sales, and recent price trends in the area. This will help you determine if the purchase price of the home is fair and if it is likely to appreciate in value over time. Second, scrutinize the agreement. Don't just skim through the fine print. Understand every clause, fee, and responsibility outlined in the contract. If something doesn't make sense, don't hesitate to ask questions or call in a real estate attorney to review the agreement before you commit. Third, consider your financial situation carefully. Be honest with yourself about your income, expenses, and savings. Can you comfortably afford the monthly payments? Are you confident that you can save enough for the down payment and closing costs within the lease term? If not, it might be worth exploring other home buying options or improving your credit score and saving more money before pursuing rent-to-own. Finally, seek expert advice. Talk to a trusted real estate agent, attorney, or financial advisor to get their insights on the deal. They can help you spot potential red flags and guide you through the complexities of the transaction. In the end, the decision of whether or not to pursue rent-to-own is a personal one. Carefully weigh the pros and cons. Do your due diligence and choose the path that aligns with your financial goals and lifestyle. Remember, buying a house is a significant investment, and it is essential to make a well-informed decision that sets you up for success. If you found this video helpful, please consider giving us a thumbs up and subscribing for more insightful real estate content. Thank you for watching.